traders must take a top-down approach. You need to take a top-down analysis of the markets. Now, I'll tell you why. A lot of times day traders look at the 5-minute or the 1-minute chart and they just start placing a bunch of trades. And then they get caught up in chop, or their timing is so good that they buy when they think the market's going to go up and it just goes right against them, or they sell and all of a sudden the market explodes the opposite direction. Now, I've seen a bunch of day traders do this, and a lot of them don't look at higher time frames. And so what a top-down analysis does, and this is my strategy, and if you've been in one of my classes, you'll see this a lot, is I'll first start at the daily time frame. And these boxes here, and actually I'll delete these, so you can see that these boxes here actually like hold some significance. Like this is where something terminated, right? Like, so there was a retracement in here, it terminated. Once it breaks through this level, it kind of falls, retraces, and then it comes down to this other key level. Breaks, comes back into this key level, right? So these are the reasons that you need a top-down approach. So I'm actually going to remove this, and let's look at the chart. Okay, it's in a downtrend, one, that's awesome. And these are a 5-minute and a 1-minute chart. It kind of just looks like a bunch of chop. Like there's no real reason for why these kind of have gathered in these areas, right? Well, that's why I love a top-down approach. And you have to do this if you're a day trader, because it's going to give you, one, a lot more confidence. It's going to give you a lot more confidence. It's going to give you context of why the price action is working the way it is. And so let's go to the daily chart. And why did I have those boxes? Well, they were actually support on the daily time frame. And so I looked at this level here. I looked at this level here, and I just moved it over like this. Okay, so now I can see, so this is historical data, right? And I did the same thing when we actually called this top forever ago, which it was almost a month ago. Feels like forever. And then I drew this other box, which you saw, which was this one right here. So if we're looking at the daily time frame, we can see that it broke this support like this. For a while it was holding, right? It would come in, it would bounce, it would come in, huge. It actually almost came into this support level, and you could have actually drawn it up here, which I think I actually had it. Yeah, I had it there originally. Boom. Okay. So you can see on the daily time frame that these were actually some super important levels, right? They kept getting traded through, and then they'd bounce, traded through, bounce, and then finally it breaks. Boom. And now we have a lot more to the downside. And where does it go? Well, it comes to our next support level. So it trades in it, bounce, trades in it, comes through, bounce. So it's respecting it, and now it's trading back in it again. So to know these levels is important because it's allowing you to catch these massive moves. If we're looking at the day trade or the daily chart, massive moves. Then let's go down into, like, say, an hourly time frame. Okay, so I like to go to the daily first, and then the hourly, because I want to see a good idea what the bias is for the day. And if you like to draw channels or even trend lines, this is another thing that you can do to see where the market is trending, right? So if we take this, and you can see here that it keeps coming to these levels, these channel lines, and we could even draw a channel down here if we wanted to. I don't think it's very accurate. I personally am not a big channel fan because you can just manipulate it to like look however you want it. So we're not going to do that because that's not part of my strategy. But you can see it keeps respecting these levels. It'll come up and it comes back down, or it just consolidates. We have our squeeze here, consolidates, a little bit of retracement, and boom. So this was an awesome trade. Like if we actually took this trade Tuesday, but it broke this support level and it traded down almost to the tick of this other support zone. So breaks through, which we always use our breakout lines or our key levels. So when we draw them, and then it comes down into this zone. So by understanding these zones and understanding, from a top-down approach, what you can actually look for, so you can then say, okay, if it does break this zone, where is it going to go? And this is where you can catch a massive move. So this moves from 380 to 20,078. So that's a 300-point move that you could have gotten if you had marked these zones and started on the daily time frame and been like, okay, if it breaks this, where's our support? Perfect. And then if it bounces off this, where could it go? Well, probably back into that zone. And then it trades down into this. If it breaks our key level again, where could it potentially go? It goes back into that zone. So these are how you can catch massive moves. So you could have caught in 300 points, 2 different days last week because of having a top-down approach. And I live by this. I think it's awesome, and it has worked for me. Been able to trade for 7 years now, and there's so many other experienced traders that teach the exact same thing, because you want to be able to see the full picture. If you are just trading a 5-minute chart, it's kind of like being in a forest looking for a tree. Or the analogy is like you can't tell, right? Because you're like so inundated with all this, like what's in front of me, that you can't actually find what you're looking for. And so then you're looking for these trades, and you're like, okay, well, I think this is going to happen, and then you time it wrong and you sell here, and then it goes against you, and then you buy here because you think it's going to go up, because if you're trading like a ICT or something like that, you see this big candle or whatever, and it doesn't work out for you. So to understand context, bias, trend, it helps you make better decisions when you go to a smaller time frame, because you're seeing the whole picture, right? Versus just looking at like one chapter. So why was I on a 5-minute chart even to start this video? Well, I use the 5-minute chart to execute my trades. Sometimes I use the 1 minute depending on what we're trying to do, but majority of the time I use the 5-minute chart, where I will find my key levels. So let's just take this as an example that maybe I'm looking at this level as a short, and I'm looking at this level, like if it comes above 20,077, I'm looking for a long, right? So I'll use my key levels and say, all right, well, we have a key level above here, and it keeps projecting. It comes into this moving averages. So if it comes into this zone, this is going to be a sell zone for me. I'm going to sell this because it keeps rejecting. It's fallen through this. Now this level of support looks like it flipped, and now it's resistance. And so then if it comes into these areas, it comes into these moving averages, I'm actually going to sell, because I now have more data to look at, and I can analyze okay, it keeps falling out these levels. Why is it so important? And the same thing here. It's like, okay, now if I'm looking for a short and it breaks this 929 level, where's my target? Okay, well, the liquidity and the previous low is down here. So do I think it's going to test that? It probably will. And if you want to add even another layer of just understanding where price may terminate or pause, you can have Fibonacci's. And so you can see here it pauses at the 50, kind of almost comes back up to the 32, comes back to the 61, comes back above 50, right? And so this is 100% of the last retracement, and you can target this low if this price breaks. You could set a take profit there, you can set a take profit there, just depending on what you're looking at in the market. So again, that's why I love the top-down approach, because it gives you a lot more data to understand where these key support resistance levels could be. supply and demand zones, and then you're able to make a lot more educated decisions on the smaller time frames. And so even today, it's Sunday, and I love on the weekends, I always start by doing this top-down approach, marking the zones for the week so that I can then quickly glance at them once the market closes and say, okay, how are we looking? We still have these zones, perfect. And it just helps me by doing the analysis early to then save time and be more efficient throughout the week. So like if we look at, so this was the Friday close, right? And then Sunday, the futures market opens. And what does it do? Like it comes right down into this support zone, right? It falls a little bit and then it retraces back into it. And now it's just trading in this zone. I would not know this, and you would not know this, if we did not mark those levels. Because if you don't mark something on a chart, this is my opinion, if you don't mark something and it's like part of your plan, then you don't have a plan. If it's just in your head and you're just looking at the chart, like if this box doesn't exist, these lines don't exist, how do you actually know? Like, sure, you can be like, okay, this is a range, but why did it create that range? Why has it been coming back into that range multiple days in a row? And why is it like, why will it bounce off of it? Why, when it breaks through it, why does it come back into that range? And you would only know that from doing a top-down analysis. And that's why it's so important for day traders. I think day traders think, a lot of new people, I think, look at, okay, well, I'm day trading, so to get the best entry, I have to have the smallest time frame chart. And I need a 1 minute or like a tick chart or a 5 minute at max. And it just clouds you just have blinders on because you're not getting the full story. So that's how I use my top-down approach. So let's just kind of recap this. So I'll start with the daily chart. I'll look at potential support levels, or support zones from larger time frames, and I'll draw them. I mean, you could even, if you want to do it a little bit bigger, you can go here. Okay. And if you want to, finagle it to where it's like right here, okay? Like the zones are there, and then you just look at these key levels, like when they break or when they fail, right? So if we're looking at a long, it's probably gonna have to break this level to come back into this 2100 psychological level. And then it's gonna probably have to break this, and it'd be even better if it breaks 928 to grab some shorts, another 200 points, right? So with our top-down approach, got sidetracked, we go daily chart, right? Because I want to see what we're looking at. Then I will go to the 1 hour, and this is what I do every morning, is I'll go to the 1 hour first because I've already pretty much done my daily stuff on the weekend. Go in the 1 hour, okay, how is it respecting these levels? Is it trading between these zones? It sure is, okay, so then it's like, well, the market's about to open. Let's find this 15-minute range. The range is here, here, and here, right? And so then I'll go down to my 5-minute chart. And I know it's kind of seems like a lot, but like honestly, like this is going to take you 1 minute to do. And then I look at my 5-minute chart, and so I'm like, okay, if it breaks 20,006, we're looking for a short. If it breaks above 20,075, we're looking for a long. And where is it going to probably terminate? It's going to probably terminate there. So that's how I use my strategy with my key levels. And then one thing that we didn't talk about was the moving averages and the squeeze. And I have other videos, so go look at the video about my setup. And a lot of my other videos, like even my 90% win rate strategy, I talk about the key levels, how to draw them, how to use the A+ setup, which is really a great video. It's probably the best one and the one that my students have loved the most. Even just regular viewers have liked that one. So go watch that one, and we'll dive deep into like my actual strategy. But this is just top-down analysis and why it's so important for day traders to do it, so that you can, one, catch massive moves, understand the context of the market, and one, build more confidence. Like when you know all this stuff, it kind of feels like you like already have like an idea of what's going to happen in the future. Because I know, like, if it breaks, again, let's just talk about this. If it breaks the zone, where's it going to come? What's going to come into this zone, right? That's an edge when you know that it's like it's going to break this zone and it's going to go to a next zone. Okay, that's valuable information that a lot of people are not looking at. A lot of people who are new are not looking at, and it's been proven of where it comes into the zone. Now it's, since we broke through it, it retraced into it, and then it failed on that zone and came back into this zone. It bounced off the bottom of that, came in, broke through it, and now it's come back into it. Okay, so it's almost like a cheat sheet. It is truly a cheat sheet of having top-down analysis. So if you like this, like and subscribe. We'd love to see you on the next video.